think that you need to see it for the first time when we're recording.
this is going to be a magical moment. An Italian meat that I have never tried before. Mild soupy. So
Hold on, I want to get this recorded.
It's not sweet soupy. Okay, ladies and gentlemen, thank you so much for tuning into what is, I say this often, a very special episode of The Scoop, but this is an extra special episode. I have Teddy Fusaro, the COO of Bitwise. I don't know if you're a co-founder as well.
COO is
and
correct.
He has brought me, he sees me tweeting about gabagool. I'm sure many of you at home or wherever you're listening do as well. And he has brought me a regional Italian delicacy called mild soupy.
Yes.
Right. What is it?
Frank.
Is it cheese? Is it meat? It's meat, right?
This is a special treat. It is a regional, hyper-regional delicacy.
Wow. It is very hard.
Yes.
How do you eat this?
You slice it with a sharp knife.
Wow,
Soupy
look at this.
It's a special regional delicacy. You will only find it in Westerly, Rhode Island.
And why is that?
Culturally, the immigrants from Calabria.
Oh, Calabresi.
That's right. They, on an annual basis, the people of the town come together and they make this by hand. Mm-hmm. And they hang it in their basements. We hang it in our basements. It's a mix of ground pork butts, salt.
I beg your pardon?
Ground pork butts. It's a piece of the pig from the shoulder.
Oh, okay, the shoulder, so not the ass.
No, correct. It is salt, pepper, cayenne pepper, paprika, and then you hang it in your basement. You have, in Westerly, Rhode Island,
this is delicious.
It's so good.
It's really amazing.
It's absolutely incredible. And what you have is most long-standing Italian families in this small town in Rhode Island have a basement that is purpose-built to hang soupy in.
No, how many? Like 10 families?
I'll take the over on 10. I'd say over 10, under 50. And the ground floor of a room in the basement is often dirt. It's a dirt ground floor so that you can have the right temperature. And traditionally around NFL playoff time, families come together to make this, grind it, mix it, put it into the casing.
Was this a tradition for you growing up?
Yeah, it was. The Fusaro family. And then it is hung for a couple months, and it's usually ready for Easter.
Interesting.
Yeah, how about that?
That is great. So, folks, thank you so much for staying tuned in as we discuss Italian meat. So Teddy, Bitwise, San Francisco-based firm, they operate a number of different funds, passive funds in the cryptocurrency market. And you probably know them because of their incessant desire to get an ETF off the ground. And before we turn on the mics, we were talking about how you guys had that 250-page report. 250 page, and then the SEC came back with 115 some odd pages, denied you again for the third time in January. That's one thing we're going to talk about. Teddy and I are very interested in all types of markets and market structure. So in this episode, we're going to talk about the ETF first, why that isn't coming to fruition yet, what will bring it to fruition, and then we're going to dabble into some other wonky topics, including Grayscale's products and why we're seeing premiums in those, as well as some other topics. So Teddy, let's start with the ETF. Walk us through what it's been like since January 15th when you got the denial. What are the steps you guys are taking moving forward?
Frank, when I agreed to come on, you said that we could talk about Italian cured meats the entire time.
Well, listen,
you have shifted underneath me.
I'm known for the bait and switch as a reporter. They used to call it, one PR firm used to call it pulling a Frank, when I'd bring someone on an interview and then completely talk about something else for the majority of it.
Yeah, a classic reporter move there,
But we
Frank.
can come back to meats at the end.
Good. As long as you promise that, we'll go on. Thanks for the introduction on me and on Bitwise. The only other thing I want to add about Bitwise, I'm not here to talk my book, but I want to say that it's very exciting for me to be on The Scoop because Bitwise is a heavy consumer of the block's content. And as a matter of fact, the legendary chief technology officer and founder of Bitwise, Hong Kim.
Oh, he loves us.
Is probably The Scoop's most avid listener.
No shit.
I don't know if we can get download data into the individual user, but Hong is a connoisseur of The Scoop's content. So I'm thrilled to be here.
Well, that's great to hear.
Yeah, and I know that he will be listening.
Hong, I'm very happy to hear that. Thanks for being such a faithful listener.
And that's why it's exciting to be here, because he and I work together very closely on all the things that we're going to talk about. So happy to be here and talking about it.
So,
yes.
ETF time.
ETF time.
What's the deal? Break it down for us.
Yeah. So here's the deal. Our application was initially entered in the beginning of 2019. Mm-hmm. When you want to list a new and novel exchange-traded fund, something that doesn't fit within the generic listing standards of a stock exchange. The stock exchange ultimately is what takes the shares of an ETF for listing, right? You need to find an exchange partner. In our case, we worked with the New York Stock Exchange, ARCA. I see ARCA. Yep. And the exchange then files something that's called a 19B4. It's a request for a rule change, known colloquially as a 19B4. And the 19B4 carries with it a shot clock countdown timer. And when that expires, it's less than a year, but it's 260 days. When that expires, then your ETF needs to be decided on by the staff of the Securities and Exchange Commission, particularly the staff of the Division of Trading and Markets. So the SEC has a number of different divisions. Staff of Trading and Markets.
That's our friend Brett Redfern.
That's right.
Leading the division.
Exactly. And particular interest to us, Frank, because that is also the division that oversees how the markets operate and looks into things like high-frequency trading issues, which I know you covered deeply during your time at Business Insider. And that is the division that is the most important for overseeing these requests for rule changes. Our period, the Bitwise period, the period for the Bitwise Bitcoin ETF, expired in October. At that point, it was rejected. The application was rejected by the staff. But shortly thereafter, it was called for review by the full commission. So you have this structure where the staff typically acts on what is known as delegated authority. So think of the staff as the people that work at the SEC every day and make most decisions that roll up to those division heads, like Division Director Redfern. And then you also have the commission, which is a politically appointed body with staggered terms. That's actually the group that's in charge of what comes out of the building. So someone from the commission, after our ETF was rejected, someone from the commission pulled that disapproval order and said, we want to review it as a full commission. It was from within that review period that Bitwise decided that what was best for us and what was in fact best for the future potential approval of a Bitcoin ETF was to withdraw the application from that status.
So I don't understand that. Why does withdrawing it increase your chances as opposed to leaving it on the table?
Good question. I think what I would need to do to answer that. Is it
kind of like a formality or like a gesture?
A dance.
Yeah, but sort of a genuflect to the SEC to an extent.
It's not quite that. I think that what it is requires me to zoom out a little bit on what the Bitwise strategy is related to an ETF. People ask me a lot, are we going to have a Bitcoin ETF? The answer is yes. The hard part in making that prediction is when. So if you zoom in, I want to zoom out to answer that question. If you zoom out and you assume that Bitcoin is a permanent fixture on the financial landscape, Bitcoin is not going to go away, right? Whether or not you believe that, it's up to you. But just assume Bitcoin is not going to go away. From that, it logically follows that we will eventually at some point have a Bitcoin ETF. Bitwise's position on how to approach that is we want to work on it and work on it the right way until that time comes and be there when an ETF can come to market. It doesn't need to be tomorrow. It doesn't need to be in 2020. It doesn't even need to be in 2021. Our company is built, it has the right people, the type of research that we can do, the type of legal advisors that you need to have, and we'll pursue the types of relationships we want to have until that day comes. And it could take a long time to get there. And that's why you think about the history of Bitcoin ETF applications. Cameron and Tyler Winklevoss's application first went in 2013. I was 10 years old then. So it's a ways back.
I actually was 10.
So that's the reason. The reason is that we don't have this. A lot of speculators or prognosticators are often looking at, well, when is a Bitcoin ETF coming to market? Well, it's not tomorrow, but it is someday. And our view is we want to be the best prepared to take all the steps to get there.
And as part of being best prepared, you had to follow that process of withdrawing.
That's a simpler answer than the long one I just gave you. The reality of it, to get a little closer to the metal, is that the issues that the staff has answering those challenging questions.
They're hard questions.
Yes.
So it's kind of like, let's take a step back here and wait for this to be solved.
Right.
Let's focus on some of those problems. I know market surveillance is one of them, right? This idea of how can we make sure that all of the exchanges in crypto are working together to make sure that there isn't nefarious activity on their markets, things like spoofing, things like wash trading, and have them sharing data with one another in a way that can surveil those types of things. But it's not so easy when you think about the way these companies operate. Coinbase, Kraken, Bitstamp, they all want to be the next big crypto Facebook giant, the Uber of crypto. And when you want to do that, you're not really looking to work together with your competitors. So anyway, the question is, how do you get over something like that? How do you get there to be market surveillance as just one thing that the commission is looking for?
Yeah, as usual, you have your finger on it, Frank. There's a great quote from Hank Paulson, who used to be Treasury Secretary during the financial crisis and also used to run Goldman Sachs when I worked there, a rung above the mailroom. He said that problems are very easy to define. Almost everybody is good at identifying problems. It's the solutions that are the really hard things.
Yeah.
So the people who have success and the companies that have success are the ones that run at problems and come up with solutions. And I think that this is the situation that we find ourselves in that you describe with the staff, is that they've defined problems and coming up with solutions to those problems is challenging, really challenging, but it's doable. It will just take time and energy and effort. And those problems, those challenges, those questions, the ones that you mentioned, they very much have to do with one central theme. Market surveillance doesn't have to be the only solution. It may be one of them. But the theme of concern is largely the structure of the underlying Bitcoin market and where it trades and whether or not that market is manipulated. And how can you solve for conditions or situations where it is manipulated? It's not a stance that says no markets are manipulated. It's not a stance that says prove to us that the Bitcoin market is not manipulated. That doesn't have to be the solution. Those are the obvious solutions, right? And those are not going to be the answers. But it is a situation that is focused on that market structure and focused on whether or not you can solve the complications related to market manipulation. This is why often when I'm talking to people, whether it is our investors in our privately offered funds, other interlocutors in the community, regulators or folks that work in DC, like some of the guests that you've had on recently, such as Perry Ann, one of the things I stress about working on a Bitcoin ETF is that we're not at Bitwise doing something on our own, right? Like the best that we can do ever, period, is tell truths about the underlying market. That's why one of the 250-page report that you mentioned was not a popular report in a lot of corners of the community, because what we spotlighted in that report was that this is where Hong and our global head of research, Matt Hogan, who's a well-known commodity in the ETF world, is the former CEO of ETF.com. He runs the world's largest ETF conference, is one of the early adopters of advocating for the ETF space. They led the research there. I just talked about it a lot. It showed that 95% of reported volumes coming out of Bitcoin trading platforms was not real, was fake, was wash trading or otherwise non-economic activity. And I think that one of the positions that we find ourselves in attempting to lead this ETF effort is being in a position of needing to surface hard truths, whatever they are, about the underlying market. That, again, is where we get the answer I gave you before, which is that it takes a lot of time, right? You guys know, because you have a research arm here at the block, that finding good data, making sense of data, and then analyzing that data is expensive and time-consuming and takes a team effort, engineers, software developers, people to interpret it. So that's what we're working on.
But the point of illustrating that 95% of the market was fake was to show where the true market was, and they actually have a robust market if you separate the wheat from the chaff. In that instance, why is that not a strong enough argument to make? Why didn't the SEC buy into you guys saying, well, here's the real market. Here's where a lot of the price discovery is happening. We're showing you how the Asian markets or those foreign markets are not impacting activity here. Why wasn't that good enough?
It wasn't good enough because it didn't meet the standard, the legal standard that they need to get to.
Interesting.
We did argue, that is precisely accurate, Frank. We did argue that, look, the technical thing that you need to do, and this was first described in the disapproval order of Cameron and Tyler Winklevoss's Bitcoin ETF application, was that one of two things that you can do is demonstrate that there is a regulated market of significant size for the underlying asset, in this case, Bitcoin. And the argument that we made, based on the data that we had, was that the CME futures market is that regulated market of significant size. And we said the reason that you can tell that it is significant is because it's the size of a grapefruit, call it, right? The volume is the size of a grapefruit. So your listeners, your legion of listeners can visualize it. So call the CME trading volume is the size of a grapefruit if you're looking at a series of 3 pie charts. And the reported Bitcoin volume is the size of a beach ball. Mm-hmm. But in reality, once you strip out that 95% fake reported volume, the actual Bitcoin market, the spot trading activity in Bitcoin, is more like the size of another grapefruit, or maybe it's the size of an apple, depending on the day. And therefore, when you really look at the data that we have available to us, the Bitcoin futures market in that new light, viewed through this new lens, is significant. Look at the size of it. We made what I would call a relative size argument.
Yeah.
That's the argument. It's relative size. The answer is that the problem, the definition of the problem we have, is more complicated than just relative size. So the solution, therefore, needs to be more technical than just relative size. And that is also assuming that the data for proving that relative size is rigorous enough. It's very hard to replicate that data because think about the challenge of these other platforms that have fake volume on them. Like name a Bitcoin exchange. There's some hilarious charts if you go look up our research, right? Chaos or like Bit Chaos or Bit Chaos.
There's BitMax.
Well, that's a different BitMax.
Not
is
BitMax,
different.
BitMax.
Oh, BitMax.
That's one of them.
Is it?
I think that was one of the fake volume exchanges.
There are so many of them.
BitMax, not BitMax.
But building an ongoing, replicatable process for finding and then evaluating and then rejecting these fake exchanges, how does one go about doing that? Like some of these guys, they don't have APIs. They just have a screen that prints numbers. Some of them go dark for years or months, or they stop making money on their scam, so they disappear, right? So it's a challenging issue.
It was pretty clever what you guys came up with, showing when the most popular times to trade were and matching normal exchanges, for lack of a better word, with these erroneous ones. And you can see in the charts just how off it was. You know, the concentration of trades being at a certain hour on Coinbase and then on a fake exchange just being completely out of whack. It was definitely really interesting and an important report for the space. I guess looking forward, again, going back to the beginning of the conversation, there are so many things that are out of your hands, that are out of the hands of all of these fund issuers. So what can you guys do internally? More research is probably part of it, but anything else that you guys can do to mollify the concerns of those folks down in Washington?
Yeah, the big thing is being committed and inventive and rigorous about finding those solutions, doing the hard work to present what those solutions are, and then presenting hard truths. There's no guarantee in business and in life, right? That once you start to peel back the onion, the data that you find is going to be the data that you want to find, right? That's what happened with our fake volume research. We didn't go into this thing saying we can prove that there's 95% fake volume being reported in the Bitcoin market. We started to peel back, look at the legal issues that were raised relative to primarily the Winklevoss rejection, and said, how can we attack this challenge? And started to do as much research as we could into the underlying market. And when we did that, this is what we found.
What about seeking help from FAs, larger institutions, getting folks to reach out, push the SEC on this? Is that part of the plan?
Part of the plan is absolutely working with other sophisticated and well-meaning and well-managed entities who are working in the Bitcoin space, right? Every company in the Bitcoin market, every company in the cryptocurrency market that is doing something the right way, that is doing something professionally, like the Blocks research department, frankly, is helping with this effort. This doesn't happen unless what's happening in the underlying market reflects the types of things that the staff needs to see.
Do the investors, FAs you talk to, do they want this thing? I mean, are people pushing for this?
This is a question that goes to why do we actually need or want a Bitcoin ETF, right? Is there a market for it? And what we do at Bitwise beyond this is, as you said, we have a series of privately offered funds, because privately offered Reg D funds are what you can now manage and issue in the United States. You can't do a registered public product. And that's what we talk about when we talk about an ETF. We talk about registered public products, and it's an exchange-listed public product that anybody can buy. So the question is really, well, why do you think that people want it? We think that people want it because we think that there is demand for advisors and investors, individual investors, but more importantly, financial advisors, to own Bitcoin exposure in a brokerage account, to access the Bitcoin market the same way that they access all other investments in their portfolios. If they have a financial advisor who runs their business on Fidelity, or a financial advisor who runs their business on Schwab, or a financial advisor who runs their business on Morgan Stanley or Merrill Lynch, or if they're just a self-directed investor who manages on E-Trade or one of the other platforms that I mentioned, we think that they want to buy that product in their brokerage accounts. But more importantly, we think that they should have the choice. We think that if they don't want to research 15 different cryptocurrency trading platforms, if they don't want to buy a ledger or a Trezor and figure out how to do cold storage on their own, we think that they deserve the right to choose how they want to access the Bitcoin market.
The answer you just gave really does dovetail well into what I was going to ask, which is, well, first I'm going to pontificate, then I'm going to ask a question.
Please pontificate.
What doesn't make sense to me with the whole ETF thing is the fact that the only other option on the market is, well, in terms of listed and you can sort of trade freely on an open market, is the Grayscale Bitcoin product, which is one of the most popular over-the-counter trading products. It's in the United States. It's massively popular. It's a huge success. I'm not trying to pick on Grayscale, but just the fact of the matter is there's a massive premium, or there was at one point. I think it's come down a little bit to around 30% for Bitcoin. Their Ethereum fund is around 400% premium, right? And at the end of the day, what I don't understand is, yes, it's the only product that is out there that can trade freely. So that's what's pushing the demand up. But if we had an ETF, that premium probably wouldn't exist, I would imagine. And folks wouldn't have to be paying far more from the NAV to get exposure to this. So it's like, why is the SEC not concerned about that? Why wouldn't they want to give more exposure so that people aren't paying more out of their pocket to get that exposure?
So speaking of pontificating, maybe the right answer to your previous question about is there demand for a Bitcoin exposure in a brokerage account is simply that the Grayscale Bitcoin Investment Trust has $2.5 billion in it.
Yeah.
There's demand there. right? One of the things about Grayscale's GBTC, and we do see ourselves at Bitwise as adjacently competitive to that business, although we also, it's a subsidiary of the Digital Currency Group, as your listeners will know, which also has multiple other cryptocurrency-related businesses. So similar to the way Wall Street businesses often work, not only are we a competitor, we're also a client, sort of like Hair Club for Men, but I don't need that. But but more to your point about how that product works, this takes me back to my ETF days. So I spent about a decade in the ETF industry. One of the things that I did in the ETF world was manage portfolios, structure products, and also was the head of capital markets on an ETF team. The head of capital markets, what you do is you help investors, mostly financial advisors who are new to trading or buying ETFs, understand the ETF mechanism, understand how to trade it appropriately, understand how to access it appropriately, because it behaves differently than a mutual fund, right? Mutual fund, you buy once at the end of the day, you sell it at the end of the day with a dollar amount, and it's something that these financial advisors who have been running their businesses for oftentimes decades, most of our financial advisors are well into middle age if you look at the statistics. An ETF is a new thing for them. So there's a lot of hand-holding that's required in the ETF business, especially when you're a small ETF issuer, and you need to help your financial advisors understand how to make allocations. And one of the things that you end up talking about is the secondary market trading of an ETF and how the arbitrage mechanism works. So what you describe when you describe that arbitrage mechanism is the dynamic around creations and redemptions in the primary market and secondary market trading, which is where most people will access an ETF. And in this case, think of GBTC, the Grayscale product we're discussing, as similar to an ETF, but different. In an ETF, we all know in investing, you want to buy low and sell high, right? The other thing that you can do is do it in reverse.
I wish I could grasp that.
It's not easy, Frank.
It's not easy.
Well, actually, let me say this.
I got in at Tilray at $87.
Oh, you're long Tilray, huh?
No.
Not anymore.
At this point, I just kind of given up.
Well, you can't get out if you're trading on Robinhood as of 2 days ago.
Yeah,
so.
Exactly. That's a whole nother story.
Right.
But buy low, sell high.
Right. So easier said than done. Buy low, sell high. You can also do it in reverse, right? You could sell high and buy low and do whichever one comes first if you have the capability of accessing the market. That's what market makers do around an ETF. So ETF trades on the secondary market where normal people, the 99% like you and I, Frank, buy the ETF in our brokerage account. If an ETF ever goes to a discount, meaning the secondary market price is lower than the NAV, the primary market price, where it can be created and redeemed directly from the fund, market makers will buy ETF shares below the NAV, and then they'll sell it at a higher price at the NAV, and they'll just slurp up that difference, right?
Yep.
And they'll buy low, they'll sell high. The other thing that could happen is that ETF could start trading rich, as traders will call it. It could start trading at a premium. And market makers will simply do the reverse. They'll sell it when the secondary market price is above the NAV, and then they'll come back in and they'll buy it from the ETF at the NAV price, and they'll lock in that difference. This is the robust arbitrage mechanism you hear about, you read about, you talk about when you watch the ETF market. In GBTC, because of other weird factors, which I'll talk about later if we get there, the mechanism doesn't work like that for two ways. Both sides of that equation aren't there. In the first instance, the fund does not allow for redemptions. The SEC stepped in a couple of years ago when the fund was offering redemptions and said because of a relatively complex regulatory item called Regulation M, that the trust cannot offer redemptions. So the trust does not accept redemptions, meaning that one side of that arbitrage scenario I just described doesn't exist. That's the scenario where if it traded to a discount, market makers would step in and buy the shares low and sell them high, thus slurping away that discount that exists. The other side of it, which is the scenario in which the paradigm that we've been in for most of GBTC's existence, is the premium scenario that you talked about. The issue with the premium, the reason that the premium doesn't collapse is because of the way that this product is offered. You can create today, but you can't sell your shares on the secondary market. There's a lockup period.
For 6 months.
Used to be a year,
now
it's 6 months.
So what if I did this, though? What if I bought directly from Grayscale, right, at the NAV? So let's say Bitcoin's trading at $10,000 in this hypothetical universe.
Yeah.
Okay. And I buy up 1 Bitcoin's worth just for the sake of simple math.
Mm-hmm.
Let's say that premium at around 30% stays consistent. And 6 months after the lockup, I then sell back to the secondary market. I could still, in that instance, theoretically capture that 30% trade.
You, Frank, have just bought low and sold high. So we take it full circle. And the reason, though, that it's not efficient enough to collapse the premium is because it doesn't happen in real time. So you have persistent demand for the end user shares where retail investors can access the market. So there's another difference here that I glossed over before, which is that maybe you and I actually can't put this trade on, Frank, because you need to be an accredited investor investing in a private offering to access the primary market shares. You got to be rich. And it's a one-way game. Remember, nobody can redeem it at NAV. So
yes, you have to redeem it at the market price.
And it's not even a redeem. You have to sell to someone in the secondary market who wants to buy the shares. Like a mutual fund or an ETF, traditional open-end mutual fund or exchange-traded fund. The reason we call them open-ended funds is because every day you stand ready to sell more shares and to buy shares back from people, right?
That's right, yeah.
In the case of this product, they're standing ready to issue new shares, although sometimes they've closed that window. They've been told that they're not allowed to accept redemptions, so there are no redemptions. But more to my point, your example of buying low and selling high is not for everyone because you need to be an accredited investor to put that trade on. And oh, by the way, you also need to, depending on what kind of strategy or fund or person you are, you need to be comfortable with the risk. You need to have 6 months to wait. You need to have a certain amount of cash. Or Bitcoin. There's a creation size in the fund that also is relatively high. You create large blocks of shares. You don't do this trade in small increments. With an ETF, there's all this efficiency in the system where you want an authorized participant who can create and redeem. Every bank on Wall Street has one. And I can introduce you to 10 right after the show. You want to find a market maker to make markets in your ETF? Yeah, we have a broad suite of market making firms that are dying to suck up that premium. But when we talk about Bitcoin products, it's a little niche. Putting on that trade can be a little complicated. What's your regulatory structure? Can you buy Bitcoin directly, or do you need someone to help you with that? So it's not unlike many other trades that you find. There's some level of friction in being able to run that strategy.
We'd like to take a minute to thank our sponsor, Cash App. Cash App has been the #1 finance app on the App Store for almost 2 years. It was also the first major peer-to-peer payments app to support Bitcoin, and it's still the fastest and easiest way to turn cash into crypto. Cash App now supports Bitcoin deposits in-app, so be sure to move your Bitcoin from whatever wallet you're using to Cash App. Don't have any to deposit? Cash App is also the most convenient way to instantly buy and sell Bitcoin. No more waiting 5 days for your ACH transfers to come through. With Cash App, you can buy Bitcoin instantly. When you're ready to take full ownership of your private keys, just use Cash App to scan an external wallet's QR code. It's really that simple. Cash App also comes with standard banking features like direct deposits and others your bank would never even consider, like Cash Card, a customizable debit card that lets you instantly save every time you use it at Lyft, Whole Foods, and places like Chick-fil-A. It's also a favorite of the Block's analyst Steven Zhang. He saves money at Chipotle every time he gets a burrito. That keeps Steven happy, that keeps the block happy, and that keeps the crypto world informed with the best news and research in the entire market. Download Cash App today from the App Store or Google Play, and I hope you enjoy the episode. I want to talk about COVID and how that's impacting markets because I'm noticing some funny, wonky things. But first, just for a little bit, I want to talk about Bitwise just as a company and what's going on there out in sunny San Francisco. What else is there to the business outside of the funds as an asset management company? What else can you guys do? We kind of talked about what you're doing right now, which a lot of people know about. But what else can you guys do?
Thank you for the opportunity to talk about Bitwise.
Yeah,
no
worries.
That's wonderful. We do three things. We
Sure.
are working on bringing an ETF to market. And as I just described, that's a hard work and that's resource intensive. It requires domain expertise in the world of ETFs, which we have through our head of research, Matt, who knows the ETF market as well as anyone. It requires a significant degree of legal expertise, which we also have. The lawyers that we work with, the attorneys that we work with, I'm going to brag on the attorneys for just a second. We work with Kathleen Moriarty, Greg Exathalis, and Barry Pershkow at Chapman and Cutler. And we also work with Rob Rosenblum and his team at Wilson Sonsini, Goodrich, and Rosati. Kathleen is also known as Spider Woman in the ETF industry because she was the counsel that brought the Spider SPDR SPY ETF to market.
Was she the one that did the Spider Kids?
I don't know about Spider Kids.
Do you know about that, though?
No, I'm not sure that I know about that.
It's like, in order to get that, there was an interesting Bloomberg.
Oh, you're right. I saw this article. It was fascinating. There's like a trust.
Yeah, they had to put in like the name of 13 kids.
Yeah. I'm not sure about the Spider Kids.
Everybody read this article. I'm going to link to it in the podcast. It's pretty cool.
Yeah.
But anyway, she's the Spider Woman.
Yeah, so Kathleen is known as the Spider Woman. She was there for SPY, which we all know now. SPY trades 24/7. Sorry, not 24/7. It's not Bitcoin yet, but it trades 24 hours a day because everybody trades SPY to transfer risk right alongside futures. She was also the counsel who did GLD. GLD is the first gold ETF. And I think of the Bitwise Bitcoin ETF, the proposed Bitwise Bitcoin ETF, a lot like GLD because it's a trust that has exchange-traded shares, or it's proposed as a trust that has exchange-traded shares. And what it does is it holds a commodity in custody. That's what GLD does, right? GLD holds gold bars, and then it issues shares of that trust onto the secondary market. So that's Kathleen, and Greg and Barry are both also members of her team. Greg worked very closely on the initial Cameron and Tyler Winklevoss ETF application personally, and is also a noted Bitcoiner, which always excites me. And our other counsel there, Barry, is a former senior staffer at the Securities and Exchange Commission, where he worked both on cross-functional ETF initiatives, and he also worked on some of the early cryptocurrency-related initiatives inside the staff. So it gives us that sort of full suite of coverage. Rob, who's our lead counsel, has been with Bitwise from the very beginning, is the attorney that did the 2 Regulation A+ compliant ICOs.
Sure.
So we have what I think is...
You have this robust underpinning legal team.
Experience on the ETF side through Matt, and then management commitment from Hunter, who's our chief executive officer and our other co-founder alongside Hong. And then also Hong, who's our CTO, and our engineering and software team have the chops to do the actual hard research work and data work that is required. So that's what I'll call the ETF stack. Then what we also do is we have these privately managed funds that we offer. And those are what I will call plain vanilla index or beta funds for accredited investors, again, that want access to the market. And we offer those to accredited investors only. But we have a large suite of high net worth individual clients, but we also work very closely with financial advisors on how they can bring these solutions to their clients. That's the market that we focus on. When you think about the market, the consumer self-directed market is about 3 to 4 trillion in assets. The managed assets business, where it's advised by a financial advisor, is 22 trillion. So that's the market that we're focused on. Those are the professionals that we work with. It's a business to business relationship with the financial advisors, and we have a large team that works with financial advisors every day, a team that's both based in San Francisco and then people who work in different parts of the country to meet face-to-face with financial advisors. So that's what we do from a business structure perspective. Third thing that we do is we produce cutting-edge research, and that goes hand in hand with the research work for the ETF stuff. But as you guys know,
also the FA stuff too.
Yeah.
So what are the?
But as you guys know, I was going to say one more thing, Frank. As you guys know from the content that you create with Larry and his team and that group at the Block, it's so important. You can a traditional index and beta asset management company. We're an asset management company, right? It's just a different asset. I can build you an asset management business that doesn't have a research team and does ETFs. You can't do that, in my view, in our view, in this business because the information is too new. The educational requirements are too high. Sometimes we talk about our business at Bitwise as an educational company that has asset management ambitions, right? Everybody has a lot.
You got to start with step one before you get to.
You need to start somewhere. And the reality is that the resources of professional research teams haven't been fully brought to bear into this space yet, which is why I'm so excited about the future of the Block. Not just Bitwise, right? You guys are, in a lot of senses, not just a media company. It's an information services company, right? Like, you guys are doing the hard work to look deeply at what's happening in these markets and bring that information out to consumers and end users. So I feel like we're working together.
Brothers in arms.
That's right.
So the episode's been so fun. I would be remiss, and I think our listeners, well, maybe they don't care. I don't know. But I think what's going on in the markets relative to COVID-19, also known as the coronavirus, also known as the work from home virus, is super interesting. So let's talk about that. You are always traveling. I guess the first thing I'd want to talk about is how do you mitigate the risks of traveling with all this going on? And in the different places you go to, how are people thinking about Corona and its impact?
So I said this yesterday morning. I did a hit with Tanaya McKeel on Cheddar TV. She had really wonderful things to say about your work,
great.
Frank. Yeah.
Thank you. Yeah.
And I said, the first thing that I want to say on this whole topic is that I'm very concerned about what's happening with the virus outbreak here in the US. And I don't say it to induce or incite panic or fear. I'm not afraid. I'm just very concerned that the level of seriousness has not risen in the public's mind to the level at which it needs to rise to yet. Like, the data that we have from other countries that have dealt with this outbreak, such as Italy or Iran or South Korea, is that you need to be, from a public health response perspective, there's a very clear set of things that need to be done to try to minimize the outbreak. And unfortunately, we're not doing them here in the United States. The first thing that you need to do is test aggressively to identify the cases and then trace the contacts. This is traditional stuff that you do with any outbreak, but trace the contacts of those people that test positive for it and then isolate and quarantine. And tragically, we're not doing number one, which thus means you can't do the others.
Yeah.
And for some unknown reason, at least unknown to me, we haven't been able to execute the appropriate level of testing yet. Now that the president has brought together a task force to work on this, there's some positive reports coming out about our future ability to do testing. But the problem, as I see it, is that because of this lack of testing that we've had, we haven't been able to, as a society, follow the real serious procedures that you need to follow. Like, South Korea is testing between 10 and 20,000 people per day for the virus. And I can't find data on the CDC's website or on the New York State website on how many people we've tested. And that gives you a sense. And in South Korea, they're in a big fight to stop this thing from spreading, even though they're doing the things basically to the maximum. The first thing I want to say is I'm really concerned about it. The second thing that I want to say is that after that, acknowledging that there's going to be a severe human cost that is very sad and can be tragic and stressful for a number of families, is that the economic situation that we're going to have as a result of this is, the right word is that it is something that hasn't been seen before. Like, the engine of the world shut down for a month. China was closed for business. in February. And I think that we're starting to see the results of what that must mean now from the rate cut that we had from the Fed in the US yesterday, because I can only envision that the dashboard of metrics that they look at must have been just showing readings that are in places that they haven't been ever before. If you looked at the China Purchasing Manufacturers Index data that came out over the weekend,
the chart
I saw
is
that
insane. Yeah, it's brutal.
It's not a contraction, right? Like a contraction is a slowdown in economic activity. This is not a contraction. Like the manufacturing activity stopped.
Yeah.
For all intents and
purposes. But you look at
purposes.
Chinese stocks and they're rebounding slightly.
I think what we're seeing now with the stock market and what we'll see with other capital markets is a propensity to trade merely in reactiveness to statements and actions and related expectations from central banks and governments. I expect that we're going to have massive stimulus and massive rate cuts and asset purchases, because the first thing that I was talking about is just it's the supply side of the equation. There's one set of like policymaker tools to deal with the supply side of the equation, right? If there's a manufacturing slowdown, like we can do things, or policymakers have tools in their toolkit to deal with that problem. But what we're going to have is you're going to have that manufacturing slowdown. You talked about the chart, and then we're going to have a different type of slowdown, which is everybody's in their house and not leaving, at least in the countries where this happened. What's the economic impact of that?
Especially the elderly, where you have the vast majority of capital in the market, so to speak.
So I think that, like, in my view, there's something happening right now with this virus, whether or not we want it to happen or not. I have a sense that people aren't really dealing with the fact that it's happening this way yet, from the people that I talk to, and I think that I talk to a lot of smart people. But there's a great quote. I'm not going to tell you who the author of this one is, but there are decades when nothing happens, and then there are weeks when decades happen. And I just feel that we're in the middle of one of those periods of time where we're going to start to see massive policy responses from the Federal Reserve, coordinated central bank rate cuts and asset purchase programs, and then we're also going to see significant fiscal policy responses from our federal governments across the globe, because I think that's the way that you have to deal with something that has this magnitude. And again, that's after dealing with the public health issues. Mm-hmm. So that's pontificating. But you asked me about different areas of the world. I think that I find this dynamic of people being aware and prepared for it to be different. So I spend time, you mentioned travel, I spend a lot of time in San Francisco, which is where Bitwise HQ is. That's where all our people are.
Are they going into the offices?
Still, yes.
Okay.
People are still going into the offices, and I think that is probably still what makes sense until we get more data from testing. But in San Francisco, I have found that most people are more concerned and more well prepared than the people that I talk to in New York, which is the metro region in which I live and which my family lives, and also that on a sliding scale, the folks that I talk to in DC, which is the capital, which is where our policy making is emanating from, are even less well prepared than in New York. And that's just one person, that's one man with one set of contexts, people that he texts with. So that's not scientific, but that's just my fingertip feel.
Yeah. Interesting. I mean, I feel like this is like there's a class element to this disease as well as it's spreading in New York. Like,
that's interesting. I haven't viewed it through that lens. One thing I would offer is access to information, access to healthcare, knowledge of the things that you need to know about the disease.
Skews
the
upwards,
virus.
yeah.
Yeah, I don't have a good visibility into that, but there's a class-related issue here too, which is how do you handle the public health costs of getting tested for the disease?
I mean, I think I saw it was $3,000 for that one family.
I think the public health reality, in my view, is that it is better to be talking about it. It is better to be socializing the ideas of what might happen so that when and if they do happen, people are ready to respond to them. For example, in every other country that the virus has broken out in, if you look at the ones that we talked about already, South Korea, Japan, Italy, Iran, where the handling of the virus has just been outright atrocious, right? From a public health policy perspective, it's just been a disaster. Yeah. And it's an example of what happens when you try to hide information as a government. It's atrocious. But what you want to do is you want to be transparent with society about the things that you can do and the things that might happen. So that way, if you call for a quarantine at some point, people don't freak out. They're not shocked.
Yeah.
So I do think it's important to be frank about.
I also think it's important to be frank.
But you asked me about price action.
I did. So I asked you. So Bitcoin was in lockstep with the S&P last week, and this week it seems to be outperforming. It's staying within a very tight band of 8,400 to 8,800.
Yeah.
I don't know what to think of Bitcoin sometimes.
Mm-hmm.
You know, I see the argument of it being a long-term hedge against the status quo. I see the argument against it being a safe haven, but now we're here and it's acting not like a risk asset in a sense. So is that surprising you that it's maintaining this level of stability during this market? Is that tied to rate cuts? Is that tied to, I mean, the Dow Jones is also up today, 783 points.
For those of us looking to assign a reason to that one, it's Joe Biden's resurgent strength on Super Tuesday.
Yes, that's a good point.
Yeah.
Bitcoin appears to have liked that sweeping victory as well.
Right. It does. So that's an interesting point, right? Like it does trade like a risk asset sometimes. And I want to be fair and I want to be clear. I think there's a few ways to look at it. One of the ways to look at it is the snarky way to look at it and say, I told you so. It doesn't trade like a safe haven asset. Mm-hmm. It's absolutely
So the Larry approach.
Is that the Larry approach?
No, of course
Is that how we want to label it? No. I think that's a fair position to have. But if you zoom out a little bit, the coronavirus story has really been a story since late December 31st. And that was when it was initially identified. And Bitcoin over that period from the end of the year is up about 25% where we are today. The S&P is off about 8 to 10%. Gold is up 3 or 4%. Mm-hmm. The Bitcoin community, as you know, Frank, from your online presence, is one that is very much a, quote, don't trust, verify community. It's a community where there's a deep sense of skepticism, independent thinking, make up your own mind about things. I think like a lot of people in the Bitcoin community, for example, are on that borderline of like, do we have a basement in the backyard that has weapons and canned food in it? And as a result, I think there's an argument to be made that the Bitcoin has been pricing in the risks here for a longer period of time if you take a step back. The last week, though, in particular, as we've had this exaggerated reaction in the equity and bond markets, activity from the Federal Reserve, expectation of activity, which I think is now a market expectation of more rate cuts, and activity for fiscal stimulus, it certainly hasn't traded on a one-for-one like a safe haven asset.
Sure.
Absolutely not. But I do think that you need to wait. We need to wait to look at how this thing shakes out over time. I think that Bitcoin is the most interesting digital safe haven asset to consider in light of the types of things that are happening in the world. If you think about the types of environments that many hard money Bitcoin enthusiastic members of our community are excited about, we're about to embark on a new period of easing, on a new period of quantitative easing relative to all of our
give me the free money.
Yeah, it's coming. I hope that I'm wrong about all this stuff. By the way, I hope that we contain the virus. I hope that we can get it stopped. I hope that the market doesn't sell off. I hope that we don't have to take excessive amounts of stimulus and rate cuts. But it's hard to come to another conclusion if you look critically.
Sure.
So I think that what we need to do is we need to take a step back and see how Bitcoin reacts during the longer cycle. Is it a risk asset? We don't know. It's been around since the last financial crisis. We think that it may not be. We suspect that it may not be. I offered two ways to look at it, one in the short term of the last couple of weeks, one in slightly longer term over the first quarter. I'm not sure which one is right, but I think that with what we're going to have going on from a money printing perspective on a going forward basis, I think we'll learn a lot. So I'm excited to see from that perspective how it plays out. Bitcoin is really just the most fascinating monetary policy, technology, distributed systems experiment that maybe has ever been run. And we're finding out more about it every day.
Yeah, it's really interesting just looking at this market. There, I'm sure you listen to Odd Lots, but Tracy Alloway often talks about when she was first getting into reporting. I think she started at the FT. It was the financial crisis, and everyone was sort of learning everything for the first time. Even the reporters who had been covering markets for decades, everything was sort of reprogrammed. You had to relearn all of the lessons to how markets work, how you expect assets to play in a given circumstance. And I think you're 100% right. This outbreak and the ramifications of it are going to provide not only Bitcoin markets, but the broader markets with new lessons. It will change some paradigms, and we'll be very excited to have you back on when more developments like this unfold. Teddy Fusaro, COO of Bitwise Asset Management and purveyor of fine cured meats. Thanks for coming on the show.
Thanks for having me, Frank. It was a blast.
Yeah.
Looking forward to coming back.
Take this inside, man. I haven't demolished it.
This literally, when you go through the making process of it, you
I would love it.
You get together, right?
Wait. Let's say this on the podcast.
Is it recording? Is it live?
Yeah, it's still recording.
So a beautiful thing, cultural tradition. The process of making soupy is you get together usually in a basement. Italians in Rhode Island, at least, live much of their lives in a basement that is outfit as though it's a combined kitchen and living room and dining room and pantry and hangout room.
Not to interrupt, fun fact, for people who don't know, Rhode Island has the highest population of Italians as a percentage in the United States.
That's amazing. I didn't know
20%.
that. Yeah. So that's a great fact. We also have a wonderful Little Italy in Rhode Island, Federal Hill in Providence. Some of the best food and cannolis. Were you really?
All right.
Where did you eat?
This is our producer
Andino's.
talking.
You ate at Andino's.
Yes.
Good for
Except
you.
I'm a old canteen guy. I love the old canteen there. If you've ever been there, that's the very classic.
Yeah.
So, basements.
Basements. So you have this basement set up where it's a cross-functional room that does everything. Usually has a stove in it. Usually has a fridge in it. Usually has a TV in it. Usually has a couch in it. Usually has a place for eating in it. So you'd have a pretty stacked basement. And then everyone gathers around tables and ground meat and spices. You have one of those machines that you can envision that's like a hand crank, and you put the meat, you mix the meat with spices, and you put the meat into the top, and then you crank the machine, and the meat comes out, and when it comes out, it's raw meat. It's like ground meat. It looks like ground beef, but it's ground pork. It's kind of reddish because it's got the paprika in it and the cayenne. And it goes into a casing, goes into like a tube, like what's wrapped around pepperoni, right? Same idea. And then you create like all of these sticks of soupy, and you tie strings around them, and you tie them together, and then you hang them up in this other area of the basement that's built with a dirt floor. And throughout the process, you're usually drinking wine. You can fry up a little bit of the loose soupy before it's put into the casing. So you can have soupy and eggs. You could have hot soup. You could have soupy in a pasta and red sauce. Put it on pasta later in the day. Consume some red wine. Usually you're like championship weekend of NFL playoffs. Maybe a little gambling perhaps on the football. So it's a fun day if you can pull it off.
So,
Takes a lot
why
of
is
time.
it called soupy, though?
It's called soupy because most people know supersada.
Yeah.
You know supersada probably, right? Soupy is just what the Westerly Italians call it.
Oh. So
Don't
this is
call
just supersada.
No.
It's not.
No, sir.
Disgraziato. Okay.
So one last
ahead.
item on the soupy. So most people make their own. Then there's also 2 local stores that have been around for a long time that continually make their own. And the stick that you have is from one of those stores.
Sure.
But there's also like horse trading period that's going on roughly now, where like people who have a big batch of soupy in their basement right now. It's coming due in a
Well,
couple
because
weeks.
Easter's coming.
Easter's coming.
Gotcha.
Frank, can I get a stick?
That is too fun.
So I have a friend that I'm working with right now to try to get my hands on a few sticks.
Well, when you get them, let me know.